Good evening, everybody, and welcome to another edition of Live Market Analysis. What a pleasure it is to be with you, bug-free now, but not a few minutes ago. If you're watching the recording and you didn't see the live one, we had all sorts of issues starting up today, but we are through them. Not through the issues and the bugs is the markets, and we'll talk about that after we talk about the disclaimer, which says that everything we're going to discuss this evening is general in nature. It has not taken into account your personal financial circumstances, objectives, or particular needs. So before acting upon any of this information, you should consider all of those things very carefully, or if in doubt, seek the help of a financial professional to determine its appropriateness to you. The rest of the information, the disclaimer, says stuff like, hey, markets go up, markets go down, you could lose money, you're probably going to lose money. Go into this eyes wide open and always understand that it's you and not me who's responsible for the stuff you do. Let's get stuck into tonight's proceedings, which is you ask questions, I try to answer them. Anything from the worlds of stocks, commodities, bonds, crypto, indices, or it could be the 3 M's of trading, methodology, money management, or mindset. Let's start, as we always do, on a Monday evening with a look at our portfolio management model. We're at a 1/3 risk model. We were there last week, certainly. I want to say a week before we went to a sort of a 50% or a third, depending on how you felt, and maybe a week before that was a third. So I don't know, 2-3 weeks, going back probably to around about here, starting to take some risk off the table. Or was it earlier? I can't remember. I wish it was earlier because then I could say, hey, what a great job we did in getting the risk off the table. But even if it was there, it's still not terrible, is it? Because this last pullback, let's face it, went straight through the dark green ribbon, was dark green ribbon, and was a bit of a surprise for me in terms of how quickly it all unfolded. Such was the dismay the world has shown at President Trump's policies. God bless him, and God bless America too. Now, in terms of portfolio management, God bless the portfolio management model, of course. We should thank it for taking us out of quite a big whack of risk, hopefully. But you'll also find that on a trade-by-trade basis, many of your trades rolled out before that anyway because they made lower peaks. They broke through that important middle trough that we talk about so many times. They tried to rally back up to an old peak and threw in a big black candle with a big upward shadow that we know, we don't like those. Or they had species-ending events. They're not so much fun. But they were all signals to de-risk, and then the portfolio management model is just holding you back, say, hey, that money that just came back in to the kitty, don't put it back out in the market because it's too risky. As a trend follower, market's not trending anymore, and therefore we need to just be careful. And I think we're still there. There's nothing in the chart that suggests to me the correction is over by any stretch of the imagination, and there's not enough to suggest to me that we're going to rally back up and go make new highs. We've got one really good candle that logged on Friday. I call it the zebra, where you get a big white candle after a big black candle. I mean, this white candle here, the one that's highlighted with the blue line, has absolutely no business occurring after that candle there. I want you to go back and check 1,000 times you had a black candle like the one with the blue line, and then how many times after that you had a candle like that. And I'm going to say about 10 to 15% of the time would be absolute maximum that you'd see a candle of that magnitude. Don't forget that this one closed all the way down here and then opening all the way back up there and going up. So 10 to 15% of the time, they're not impossible by any stretch of the imagination. If they're going to happen, they're probably going to happen after a big correction. Okay, so nothing on the chart isn't making sense. It's all making sense, but it's telling us just to be cautious. Where could we rally to? 18,605 wouldn't surprise me at all. Somewhere in this trend zone, we're going to have an interaction with supply. Supply is going to come out and say, I'm back. Okay, here I am. I mean it this time. Big black candles, upper shadows, or it won't be so impactful because the demand side's actually coming in really strong again. Okay, what do I say? Something like this. Okay, something like this. Exactly. The great news is we can always go back to the past to get an idea, just an idea of what might happen in the future. We could see something like this. Of course, if we have a V-shaped rally like this, I talked about it today actually in today's evening wrap, V-shaped rallies are the ones that stick. Okay, so if we get a rally like this, okay, we're good. We're probably going to go back up and make new highs in no time. If it's not a V-shaped rally, if it's something, let's go back in past. Oh, that's a bit more gentle, but still very solid. Good candles, good price action. That's pretty solid. What's not? This is not. Is that a V-shape? That was a little bit V, but the fact we took out that low, that's not good. I guess that's not the rally. This is the rally. This is a sharp rally. This is still a good rally, isn't it? This is not the rally. This is the rally. That's still very good. Let me find a rally that's not V-shaped. What about this one? Is that V-shaped? You tell me. I'm not going to try and convince you of anything. You should be able to decide for yourself. That's the low. There you go. That's the low. It still stands as the low of that bear market. Is this a V? Are the candles here so clear-cut? Is the price action so clear-cut? This is far less of a sustainable rally. You can see it therefore took a lot longer until we started to get some really nice angle of ascent there. But even then, not certain. So lots of water needs to pass under the bridge before we can be sure that we're heading back up. But a really sharp rally would give us more confidence. A bump along the bottom, something like this, or just a quick fail with black candles in here would be bearish. Going straight down would be bearish, obviously. So we're only here, not necessarily to do technical analysis on the Nasdaq. I think that's a bit passé. Let us just say that we're still at a 1/3 risk level with no reason to change it. Heading over to the ASX 200 and ditto. I don't need to say anything else because, hey, look at the collapse here. I mean, hands up. You go, show of hands. Who predicted that this was going to happen? Of course, Smarty Pantsers out there might have predicted a pullback, but did you think we were going to pull back with, I don't know, about 12 out of 10 black candles in a row and in an almost vertical fashion without any sense of demand coming in to save us? That's pretty extreme. So if you didn't see that one coming, you're a bit like me, and I think you can be forgiven for that. Same deal. V-shape is strong demand signal, and anything less than is worrisome for the bulls. If we don't get a bull market after this, that's not the end of the world for us. Look, we can go short as well. There's still going to be stuff that's going to go up. That's why we still have a third of our risk on the table. Even in the worst bear market, we're still having some risk in the market because there's still going to be stock. We have the ability to take the risk. It doesn't mean we're going to use up all of our third all the time. But as we've seen in these sessions, there's still going to be stuff to buy, whether it's gold stocks because people are nervous and gold's going up, or something. The company that still has to clean toilets, okay, because we still need to clean toilets, or supermarkets or whatever. There'll still be opportunities. So we have that ability to have some risk on the table, and of course, whatever risk we have, we're also then going to be looking to hedge that risk, and you can be up to, logically speaking, it then says, well, we can be up to a third of our risk on the short side, because then we pretty much don't have any risk when you think about it. It's kind of the longs are balancing the shorts, and that's about the extent of where I think we'd go, even in a strong bear market, because whilst there is opportunities to make money on the downside, as you will see if you've already been shorting, it can be tough to make money on shorts in a bear market because the rallies are very, very steep. There's a lot of shorts in the system, and then the short covering rallies are extreme. So the best thing I find in my experience when markets go like this is to just have a little bit of risk on the table. As a trend follower, we're waiting for trends to re-establish. And we have to be patient. And the worst thing you can do is go, I'm not doing anything right now. Let me just have a look at the markets, or let me take that setup that I ordinarily wouldn't take, because in a bull market, I'd go for 10 setups better than this, because there were 10 setups better than this. But this is all I have today. Well, I'll take it because I'm bored. We can't do that. That's not the way we operate as trend followers in a choppy market. In a choppy market, trend followers get chopped up. Okay. If you want to be a range trader or a reversal trader, all those sorts of things, that's fine by me. Go find somebody who's really good at that and ask them for their strategies. That's not my gig. It's not what I do. I just stay out. Okay, or have a very little bit of risk in the market. So you can do whatever you want to do, but make sure you've got a good system behind it. Let us see if there's anything to push us off this view we have of really no view at all, and that's okay. That's okay. The Russell 2000, it was a canary in the mine shaft, wasn't it? It has bounced on Friday, as the Nasdaq did, with again a zebra candle, crazy zebra candle, and from a defined zone of demand. No surprise there. So no, not pushing us off our view. The Europe obviously pulling back. I did say this maybe a couple of weeks ago. I said, hey, Europe looks great. It's benefiting from the flow of capital away from America, that some of that risk money coming out of America heading to where it can still, they feel that they can still invest, and that's Europe. But it would get to the point at some stage where if the correction develops too much in America, Europe is not going to be immune. The DAX is still pretty immune for now, though. The French less so, the Brits less so, and the Spanish less so also. So certainly Germany looking very, very strong. But nothing there telling me that the end of the world is coming. That's good news too. The Hang Seng still looks very strong. The Nikkei is coming off. It is lumped more into the loser, as a loser from the trade war rather than a beneficiary. India's been coming off for a long time. China, surprisingly, that actually still looks pretty good there, but we have seen some rhetoric, and that's all it is, nothing more than rhetoric, about stimulus probably helping. Having a look at the ASX sectors very quickly for you, not much of a change since last week. We said discretionary now in some real trouble. Energy is still in trouble there. Decent day today, however, and financials, we talked about breaking trends. We talked about some of them popping up even on my downtrends list. So being very cautious there. Also, gold, on the other hand, we said was still looking very, very good, and it still is if you've been following my watch list that I publish for you each evening, just exclusively, hard to say, exclusively for you lot. You get the TradingView webinar, TradingView watch list, and just go tap. All the charts are in their glory. Everybody else has to wait till the next day, of course, and get the watch list, and then they've got to go through it one by one. So in those, we've seen so many gold stocks. Healthcare is a train wreck. We've had nothing but shorts in that one in terms of Ramsay Healthcare, CSL, Cochlear, technology, major problems there. We called that also last week. Materials actually having two good sessions in a row there, but two good sessions does not a reversal of that bear market make. So pretty neutral at best over there. Property looks terrible, and how the mighty have fallen for many of these consumer staples. Not great either. Telco's breaking down. And does this, ladies and gentlemen, by doing this, does this look to you like an Australian market that is experiencing broad-based strength? Does it look to you like an Australian market where fund managers are piling in en masse? And the answer is no. Utilities actually looks okay. So much repair needs to be done. We went here, we talked about, okay, well, what needs to be done, V-shaped rallies and all that sort of stuff. But so much damage has been done. It does concern me, but let's be alert, not alarmed, as they say in the classics. Let us check out the base metals, and they have actually been going pretty well, maybe on the back of a bit of China stimulus, maybe on the back of some front running of tariffs. So, if you think there's a big tariff that's going to come in and prices are going to go up, you might want to buy some of that product in advance of the implementation of the tariff and stockpile it, and then you'll have to draw down on those inventories and try and save some money that way. So certainly aluminium has been strong. We know copper's been strong. Again, if you've been watching the evening wraps, I have been talking up that one, or at least I've been bullish on it. I don't talk stuff up, I just follow the trend. Nickel has turned around. How about that? That's like if you spoke to me on Valentine's Day when this mess began in markets and said, actually one of the big beneficiaries of this mess is going to be nickel, I would have laughed at you silly. But there it is nonetheless. Nickel's not a victim of any of these tariffs, but steel is. I wonder if that's got some. Well, there you go. That's probably got something to do with it. Lead, how about that? Breaking its downtrend. Tin going exponential. Good for your Metals X followers if you like that one. And zinc actually recovering as well. So looking at those charts, you would wonder where's the crisis. But I guess there's a bit of other stuff going on. Lithium carbonate bumping along the bottom. That is the opposite of a V-shaped rally. I was trying to find examples back there before. I should have just shown you this one. That's not what you want to see. If the Nasdaq does that or the S&P ASX does that, we are going to be very, very bored. We're going to have very sore hands from sitting on them for such a long time if that was to happen in markets. And what else can I show you here? Let's head over to the TradingView screen, where if I click on indicators, and click on invite only, you'll see now, not just me, you can see this as well. So maybe, did you notice? I sat down there took me about an hour and a half yesterday to type in literally We'll copy and paste in everybody's name, one by one, 3 times over on the 3 new indicators that I've given you, which is the relative strength comparative, the optimized true range, and the volume. Okay, didn't have to reinvent the wheel for volume. But anyway, if you wish, you can certainly just click on these things, add them to chart, I'm guessing. Well, you can't right-click, can you? What does that do? Read more. Well, you can read more anyway. I think if you, there you go. We're going to star them, aren't we? We're going to star them and make them our favourite. And that way, when we click on favourites, they're in there well, it looks like I've doubled them up, but that's okay. The point is, once you have done that, you can then add them to the chart. That way you can add them to the chart, your favourite indicators, and set them up thusly. And thusly, you can do it any way you like. This is the way I do it. I like to put the optimised true range on the top. Why? That's just a habit. So red bars is volatility, price action, volume, volatility, trend, P, V, V, T. They are the 4 tenets of my methodology. And within price action, of course, are my peaks and troughs and my candles. There's the volatility that I use, and I'm using it to see what's above average and what's below average, what's a big spike and a big cluster of volatility and what's not. Stuff should go up on very low volatility. 2 thumbs up when the volatility pops in. That's indecision, right? Low volatility is consensus. I'm a trend trader. I need consensus to trade. High volatility, probably not as much consensus. But there are some caveats to that, obviously. If you're a big white candle, then that's okay. But we keep an eye on those things. Certainly a big black candle in an uptrend is what we're looking for. And you can see when that occurs. And the volume I put in next, they're the blue bars. Interestingly, this has not updated. I did update yours though. I could go to source code, but anyway, updated yours. So yours would be blue. So I realized I made that mistake. I'll fix mine later. And then you've got relative strength comparative, and you just click on that and you can then select. From inputs the ASX 200, the XJO, the IXIC. That's what I like to use in the US. That's the Nasdaq Composite. And, I sort of scrunch them down a little bit. I don't know, whatever you would say that is, a couple of centimetres on my screen. I've got a big screen here. And just so you can still see. I mean, the most important stuff is still happening up here. So make sure you've got the most room up here, and you don't need too much detail down here. There you go. Enjoy yours to use and prosper. Hopefully prosper from, we're looking for above average volatility, volume to tell us stuff, and of course the relative strength comparison. How is the stock comparing to the index that we're trading in? We've also got our trend lines on screen, and we are going to go where we were supposed to go, which is over to silver, and we are going to continue our whip around our grounds. And silver looking okay. I've said to you so many times that I didn't think this one was going to go exponential, but, that doesn't mean it can't follow gold up. But it's always going to be a poor second, isn't it, to gold? And gold is certainly running first at the moment. It did take out, it did tickle. You can see here, if I do that and go to data window and go, you can see the high there, 3017 is the high so far. There's our round number. What does that mean? Do we sell half of our gold stock holdings? No, we don't, because they're running their own race, individual races. But we might see a little bit of a pause here. It's round number sort of stuff. But having said that, look, there's no price action, is there? You can see that already. You can see, Carl, I don't think the market's that worried by 3,000, is it? I mean, there's no big black candle there, no big upper point in shadow, so I think we're okay. And I do think we're okay on gold. Let us keep moving then to copper, which we said is improving. I think that's starting to look pretty good. Nowhere near as good as gold, of course, but looking pretty good. Iron ore got hit today despite the China stimulus, whatever, I don't know, it's going sideways, who cares? Uranium is still going down. And what else got? Natural gas still going up roughly, holding the short-term trend ribbon. That's what the short-term trend ribbon does. That's still short-term downtrend, long-term downtrend in my opinion. A little bit of rally there in the Chinese stimulus, but nothing really to write home about. The coal prices, one rally there, but pulling back, looking for a double bottom, maybe, and that one is still very much in the doldrums. So again, nothing really to see there. Let's head over to the bonds and we'll finish our extended wrap-up, about that, partly technical difficulties, partly talking about too much about V-shaped bottoms and new indicators. But the US bonds, what's going on here? Well, we talked about the big drop here, going past that inflection point where lower bond yields stopped being a good thing and started being an indicator of potential recession or certainly an economic slowdown. We're still in that mode, okay? We have seen a little bit of stabilising here, so people are not buying bonds as aggressively. And don't forget that that buying of the bonds, the cash is coming from somewhere, and it was coming from the stock market. So if we to see this yield chart turn down again, we mean bond prices are going up, so we've got excess demand for bonds, and again that would indicate that that money is probably coming from the stock market. The stock market we're heading down. We don't want to see this rise up too much because ultimately we'd rather not have higher rates if we can get away with it, and sideways is just good. I think sideways is fine. Slight gradual uptrend like this can facilitate a most wonderful rally on the stock market, make no mistake. That's it, let's go. Japanese, there's a Japanese interest rate decision this week. It's been ebbing up towards 1% for a while. Will they move this week or not? The consensus is no, but the consensus is also inevitable that they will at some stage, and the market is telling you that. So I don't think we'll have a big carry trade unwind because the market has been moving towards that. If there is an announcement, by the way, of an increase. Let us head over to your offline requests, and we'll kick off with, I need to find them again because I had them open and there weren't that many, but I had them open, I promise you, and then we had the technical difficulties and I've got them again. Okay, so Craig is asking about GMD, and let's head over here and head over here. Yep. And go back to here. Still looks fine, Craig. I've no issues with that. Performed pretty well today. We don't like that shadow. But come on, it's hardly enough to concern ourselves about. As trend followers, we must trust the prevailing trends, which are, let's face it, pretty darn good. So I don't think we need to be too concerned about that. If I start to see a cluster of black candles, a lower peak, I know it sucks because you're going to go, Carl, by the time I see that, I'm giving up a bunch of profit. Why can't I just get out now? And I'm thinking, yeah, you can do whatever you want. I'm just telling you what I prefer to do. And I still want to hold this thing when it's at $7. So if I get out now, and then I might not, it might look good again, and I go, oh, look, I had a good trade on that, I won't trade it again, I'll go this way, I'll do this thing instead. And then, there's every chance I won't have it when it gets to $7, and I'd be really disappointed if that were to occur. So on that basis, that's the thing that worries me, okay? So I think you need to make a transition, this is just my opinion. At some stage in your trading, you need to transition from the person that's worried that they're going to give up profits, right, to the person that's worried that they're not going to hold on for the big move or that they're going to limit their profits. I don't know if I said that right, I don't know if you understood it, but mentally you need to transition from the person that says, oh, what if I lose, to, oh, what if I don't make the full profit on that? That, really the trend completely indicated that I should achieve. Because we have fail-safes in place. Okay, why can we think like this? Why do we have the luxury of thinking like this? Because you might say, Carl, that's a really greedy way of thinking, and Warren Buffett says to be fearful when people are greedy and all that sort of crap. Well, we have fail-safes in place, unlike most other traders who just hold on and it goes down. They'll hope it goes back up, or they say it's just a pullback, or they'll buy some more, or it's got good fundamentals, or just there's an announcement coming up. My mate told me he works on the drilling rig. We don't subscribe to any of that rubbish. We have systems in place to take us out of the market. Okay, so we have that luxury of holding on for as long as we need to. Craig, that's a long-winded way to say, if you can see a reason to sell, go for it. I can't. It's a FRP for me. Let me write that on the screen. Are we buying in today? No, of course not, because those candles don't warrant it, but we are certainly FRP on that one. I should have read the rest of Craig's message, but it says it's had a nice bounce. Would you be adding a third? Well, I think I've answered that question too. I'm not adding a third on that candle, but certainly to answer your question, let us say FRP and also NHC. What does that stand for? Does it stand for New Hope Corporation? It stands for next high close. Okay, because we're in trend. Everything else is there. So what are we waiting for? We're just waiting for the next high close. Another nice white candle, or a candle that closes on its side with the long lower shadow. Our demand side candles, as we call them. Mick's got OMA, Omega Gas and Oil. What did we say last time? Next high close plus 1/3. Let me grab that and move that up. So we'll probably, on that day there, we would have had, well, I guess today's candle is the 17th, so we would have had the 10th candle, so we would have had that candle. So we actually didn't have this candle yet. So yes, we said next high close, FRP, because it looked great. I didn't say plus 1/3 on that candle because I was a little bit concerned about the shadow there. We should see a high close, shouldn't we? So next high close. Have we had a high close since then? Well, that's a high close, isn't it? You could argue, hey, Carl, that's a high close, I should buy it. I don't mind, you do whatever you want to do. But I think logic suggests that the high close should occur somewhere towards the top of that candle, doesn't it? Do I really need to add that in? Probably not. I think we can all work on the basis that we want a better close than that one. We haven't had it yet, so I still think it's a hold. Just though I'll explain why in a second. But we haven't had any risk. And what Mick's saying, nothing on this one. He's just asking about it. I would not be holding a full position. I think beneath there. I don't like this big black candle. That scares me. It frightens me. That one. That's really nasty, isn't it? That's an ugly candle. So I think if we close beneath that low, and has it made a little bit of a trough? Well, it hasn't really. Technically, that's not a high and a high low to that one, and neither is that one. But I don't like it beneath there, and I certainly wouldn't want it. I think I'm zero risk position beneath there. Okay, if I had it. Otherwise, probably still holding, I think, for now. If you don't have it, then you don't need to do anything, do you? Mick. Let's go to Mick's second one, which is MPA, which is that one there. Mad Paws. Okay, well, this hasn't come up in any of the scans that I can remember. I guess here you could have entertained it. So there, I think you're entertaining it. But that's only its first pop, isn't it? Above the long-term trend ribbon. And even on that day there, I do think that day it's turned amber, hasn't it? It's turned to amber. But it hasn't dinked yet. So we need the dink. And here's your dink. Here, there's your dink. And did it really do anything good on the dink? I mean, they pulled back here, and that candle was a bust, wasn't it? So that candle's a bust. Candle's all right. You know, there's nothing really here telling me to buy it. If I squinted, maybe you could do it there. But you can see it's all a little bit of liquid, a bit sketchy. Look, I think that's the first place, and that's the first place that I could go a third. But even then, probably going to find something else better on the day. I'd say, hey, if you did it there, I don't disagree with you at all. I can see why you did it, but only there. Only there. Okay, so here. Sorry, here or... No, I could squint there, here or here. What do you do now? Well, it's a function of the rest of the market tanked and it's completely illiquid. Today's candle is good. I mean, I could say something like, you know, beneath there, the trade is bust, but it's so illiquid, it could just do it in the morning and just be straight back up by the afternoon. And this is part of the problem with trading these sorts of stocks. So let me say, FRP would be the wrong thing to write, but I guess if you've got it, Mick, then FRP. Am I plus 1/3 on that? No, I'm not plus 1/3. I'll be a long way from that happening. We'd need to do something like this before I could get to that point. And even then, it's Sketchorama. It's so sketchy. What drew you to this one in the first place? After such a horrific downtrend, you know, it'd have to do something just so amazing to drag me in. So yeah, look, I'm just auditing your choice there. That's all. Don't take it the wrong way, Mick. I just don't get that one. I just can't see it. Now BVS, we did talk about this last week, and Mick has written ZRP now ? And yeah, I think that's what we talked about. So I'm not going to change my position from last week if that's what we said last week, and it's clearly closed beneath those areas. Or maybe we said it the week before. I mean, look how far back that writing is. Don't know. I can't see. Yeah, I'm struggling to find a reason to be in it. If you had to, then let me just... I mean, look, you've got to have there's got to be a practical way. Is that the right word? Practical way of dealing with everything at any one point in time. The point I'm trying to make is that if you didn't follow the rule before, a week ago or 2 weeks ago, just find a way to follow the rules now. That's okay. Don't beat yourself up. It's pointless. You don't go, oh, I should have got it. Just forget it, man. They're just pixels. Okay, so just find the next point of demand and say, if it closes beneath there, I'm out. I'm going to check the market at 3:45 every day to see if it looks like it's going to close beneath there. And if it is, I'm out of there. Like every new day is another day to just apply the system. And if you did it on 9 out of 10 of your stocks and that 1 out of 10 is the one you failed to do it, that's okay. Just start the next day. Let me just annotate that for you. So if we come back to it, let's go close below minus 1/3 and we'll go ZRP for there. Must be ZRP from there. Okay, they're all the offline requests. Let me head to the online requests. Hello everybody. Hi Carl. Ad risk on TTT. Yeah, I think so. TTT. Just keep in mind that I can never find TTT here because I go TTT, TTT, and it does silly things like that. But I can find it here, Avant, because is it? No, it's not there. Oh, it was in the shortlist. Darn it! It was in the shortlist, but it didn't get shortlisted. I'll tell you where I can find it. I can go here, here, and here, and here, and here, because it was in the shortlist. I give you the shortlist, and then I challenge you to find the shortlist, of which you do get the next morning. So Tuesday morning, tomorrow morning, you go in and you'll see my feature charts. Okay. Why didn't TTT make it as a feature? Well, I felt there were other ones that deserved feature over this one. This was very, very close. Wasn't a lot of volume sort of on today's move. Like to see a bit more of a push. Some of them had a bit more of a push, a bit more interest. But yeah, that's not the deal breaker. The deal breaker is the point of supply. Just see how it goes there. Look, it's very good. That's why I made the shortlist. By getting into the shortlist, it's a plus 1/3. But you have to have some method, I guess, of saying, well, I need to go from a big list to a small list. I need to get to just 3 or 4 that I have room for in my portfolio today. So we nitpick, don't we? And we say, well, that one has tested into its point of supply. So that one made the list today. We've got a lot more interest as well. We've got a bit of supply removal there. We hit that supply level, bunch of supply came out. How do you know? Look at the volume. Where's the volume? It's the blue bars, isn't it? Way above average. And that was soaked up by the demand. It didn't come down very far, which means the demand's very strong and actually pushing through. So if we had to compare AMI and Titomic, I put AMI ahead of Titomic. Let's go to APA. How does this compare to Titomic? Why didn't Titomic make the list of that? Look how strong that close is. And that's actually taken out its point of supply. Yes, there's another one up here, but this is all very, very strong. I think I put this in, was it that candle? Maybe first time round, or that candle. And this is a stock that we had as a short, and it just goes to show, right? There's no playing of favourites. There's no getting hung up on things. There's just, is the demand side in control? Go long. Is the supply side in control? Go short. They're just pixels. Let's have a look at this one. I didn't make the shortlist, but look, I think there's something there. I think it's an interesting one. It's holding the short-term trend ribbon. This is a very strong candle, very shallow pullback. Nice move today. Could have been higher. Didn't make the shortlist, and a little bit of a point of supply there. What about this one? That one did, because I know this is Sketchtown, but it is an ETF of really big companies, to be fair, and it is market made, so we don't have to worry about liquidity so much. But that is going gangbusters, so happy with that one. I thought this one was far stronger as well. Just a very clean price action move. White candles, good volume push. CMM, very good, making a new high. That got in to the shortlist. That also got in the shortlist, but it's effectively the same as the other one. One is defence, and the other one is defence tech. What's the difference between the two? I don't know. One probably has companies that blow things up more efficiently with more technology. I don't know. That one made the shortlist, but didn't make the shortlist because, well, it's a bit sketcho, isn't it? Bit of a point of supply there. Lynas actually made the list. I think this looks interesting. A little bit of above average volume there. Pretty clean. Nice candles. I know there's a point of supply. More of a turnaround setup. But having said that, we're still double green trends. Could Lynas possibly go up? Hey, just as an aside or a disclaimer, I never get Lynas right. That one didn't make it in. Not bad. Got very close. That's why it's in the list. I'm just worried about that big upper shadow. SGM made it. Yes, there's a shadow there, but I just felt this move is just so strong. You can't fault it. So that one went in. And then we get to Titomic, which is very good, isn't it? It is very good. But there's, nitpicking, yes, but just a couple of things there that just pushed me off it. And it was very close. It's a very close call. So that is a great way to step through a shortlisted list, mind you. There's 2,500 stocks on the ASX. And I came up with 2, 4, 6, 8, 10, 12 that I would personally buy with my money. That's what those lists are. Okay. And then I narrowed it down slightly further, and only slightly further, only a couple of them, as you saw, missed out to this list here of 8. Okay. So Titomic, maybe a little bit unlucky, one of the 4 that did make the list. But hopefully that helps you. That helps you, go from a big list to a small list. And to answer your question on Titomic, which I can't find it, I never can. Do you want to see me find it? What if we went to TTZ or something, or TT, what's after T? TTU, TTV. You have to go to the one after it. Trust me. TT. It's there. You just can't get it. TTT. I can go somewhere else. Okay, let's go to FRP plus 1/3, just to make sure I've got it on screen. Let's go to your next one there, Avant, and it is DUR, which I did see today. I saw that big candle actually. Probably lacked a little bit of conviction there, but otherwise a very, very solid candle coming out of the long-term uptrend driven. And it was, look, I saw it. Now I'm looking at it, I'm probably feeling like I should have shortlisted it. But I think it just, we've got a short-term downtrend here as well, right? We do have lower peaks and lower troughs. So why don't we just wait for that first supply side response? Because there's going to be supply in the system. You can't get down here without there being a decent whack of supply in the system. So I think what we're waiting for here is the supply side response. And equally, of course, then, what is the demand side response? And that's all the DINK is about. That's why we look for the DINK. And if we have a very shallow pullback, and wherever that might come, it might be, it might be a small candle here, then a little bit of a pullback here, maybe a little bit of a pullback there, and then boom. Okay, there's very little supply in the system, right? The market has made its mind up to want to go back up the other way. That's a big yes from me, and that's when it gets shortlisted and it gets shortlisted feature chart. Okay, but it's because I think we need to be a bit more cautious, and I think the situation is a bit more tentative. Get out of the way. What we're worried about is, we get a big supply side response, something like that, right? And even then, it might start to go back up again, but we're going to be far less enthusiastic about the price action, aren't we? It might just need more cooking. So, in summary, what are we going to say with this one? FRP, if you've got it, certainly. And DINK, if DINK, we need something like next high close. Next DINK, next good DINK, next shallow DINK. What are we going to call it? We'll have to come up with something. Next DINK plus 1/3. I don't know. Somebody come up with something better than that. Okay, let's go to the next one, which is OTR. Does the optimized true range indicator work on a weekly chart as well? Yes, it'll work on any time frame. It's just telling you what the optimized true range is. It's the average true range of a better. Hey Carl, this is Michael. Hey Michael, your thoughts on SM1? I think it looks very good. Synlait Milk. I did run it a little while ago. Maybe on that candle, maybe on that candle. I can't recall exactly when. Unless I ran it earlier. I reckon I ran it down here. Michael, where did you get in? Was it on this candle, Michael? Or was it here or here? Give me a price and tell me if you got it from one of my watch lists. I reckon I did. I mean, that's meeting all my criteria for a turnaround play. Why wouldn't I put it in? The only thing that could have kept me out of it is if the turnover filter. There you go. Well, that might have kept me out. There you go. You can see it's still zero, 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 still zero. Oh, I saw this one. So how can that be zero the whole time? That's weird. Yeah. Unless that's broken. Shouldn't be. Looking for it to turn one. What does Michael say? Michael's not saying anything. He's gone to sleep. Fair enough. Okay, putting all of that stuff aside, this is very easy. FRP plus 1/3. I like this one. I'm guessing I didn't see it today because of the liquidity filter. But my gut says I've seen this chart recently and I ran it. I know I ran it. Anyway, that's what I think about it now. MLX. Okay, today is a little bit problematic, isn't it? Not an ideal candle. Is it a take some off the table candle? Okay, we can see something's happening up here, right? So let's just zoom out a little bit. And I'm not trying to make an excuse to do it. That's not what this is about. I'm just saying, well, there's clearly a bleeding great big point of supply up there somewhere. Okay, let's find it and understand what it means. So let's go from that peak to that peak. Okay, not overcomplicating things and then extend it across. Okay, so we do have a display of excess supply near a zone where we have seen excess supply in the past. I don't think I'm 1/3 yet, but you can see or tell from the way I'm conducting myself that I'm very close. Look, I still think we're FRP, but I think next low close, another similar sort of candle, long upward shadow, black body, or a black candle that just tries to push in a little bit and just doesn't make it. I think you can just take a little bit off the table, and that's literally all we're talking about. That's all we're talking about here. And the goal with that is to get some out at the top so I don't feel so bad if it does pull back. Puts us in a better mental state to continue to trade in an appropriate way. But also, it's being a bit cheeky. It's saying, well, I'll try and offload a bit there with a view to maybe getting it back down here. I'll sell a third at 70. I might pick it back up at 60 on a signal. That's all. But we're still FRP in the meantime. Let's go to LRV. Also for Michael. Okay. I think it's losing a little bit of momentum here. Certainly this bona fide downtrend, medium-term downtrend, low peaks, low troughs tells you that. Has picked back up, but when we compare it to, that's comparing to the ASX 200. I'd love to change this and compare it to the gold index, and we can do that. I can't do that easily here. I'd have to go into the formula and edit it, but we can actually do it, funnily enough. We can do it here. How good's this? So if we go to, I've got to double click on this, and what I could do, if I go XGD, that's how neat this is. We know it's beating the ASX, but it's not hard to beat the ASX because the ASX just tanked. But why don't we do this? Small ordinaries gold index. And we can see that it has significantly underperformed. That's Titomic. That's not even the one we're talking about. So Titomic's underperformed, which again is another reason why I've been a little bit circumspect about Titomic. What about this one, which I said I'd happily buy in a feature chart? Well, that's beating the gold. Now, don't forget that the gold sector index has been going gangbusters. Okay, we need to put this into perspective. Yes, it's easy to beat the ASX 200, right? Let's change this back. Let's go ASX 200 XJO. And, okay, easy beat. Okay, but when we go to the XGD, now it's hard to beat. So if we're still beating it, that tells you that we're doing really well. So let us check what we were checking. I've forgotten. LRV, Larvotto Resources. Here we go. And now we've got the XGD. That was actually doing better than I thought. Yes. Oh, well, let's go show how much I know. Better than I thought. But I just feel that was a big waste of time. But I did show you how useful that indicator can be. I just feel it's losing a bit of momentum, Michael. Okay, that's all. Bit of momentum. And it doesn't mean wholesale getting out. That's me. It just means we're going to be a lot more attentive, right, to signs that this area of supply here is overwhelming. And that's all. So just keep an eye on it. Probably there. Okay. And we're looking for black candles, sub-shadows, that sort of stuff. Usual sort of stuff in there. Lower peaks, lower troughs. So boom, 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 boom. And I'm starting to get more aggressive on my exits. Until then, FRP, no problems. Let me prove that to you by doing that. Okay, I need to pick up the pace because it's crazy late already and I haven't done many. Amber's got APA. Good news. Talk about picking up the pace here because we did it. We looked at that in the feature charts, Amber. So if that's one of your feature charts a day, ditto with me. Good job. Well done. Love it as a turnaround setup. Love that one. And some people might say, oh, it's got good fundamentals or it's got a good yield or some other crap like that. I don't really care. It just looks good on the chart to me. NEM, that looks okay. I did like the gap. I did run it yesterday as a shortlist, but not a feature chart because I'm worried about this big point of supply here. Okay, I don't like big black candles. I don't like going long. I don't like big black candles. I don't like going long in the face of big black candles. I don't like to fight the supply, which I know is in the system. Like you cannot get a more obvious signal that there's excess supply in the system at that area than that big black candle. So that sort of stuff scares me a bit. And I go, well, if I can find something better, I'll go that way. But look, at the day, that was a big gap, it was a big candle, and it was turning off the trend ribbons. So I could have swung it. Still FRP, I'm not adding a third, but I can see why you would be drawn to that. Just explaining to you why it didn't make it to a feature chart. But it meets my criteria, and therefore, if you like it, go for it. Lynas, well done again, Amber. I put that on my list as well. Is this out and out the best? I like APA over this one. If I had to choose between APA and Lynas, I'd go APA. I think that's a cleaner turnaround setup. You could argue, Carl, this is a continuation. Yeah, not really. It's still really sideways, isn't it? But it does look good. And again, we are going into this one eyes wide open, and we know we're going to have a challenge. We're going to have a challenge all the way up there. That's all going to be a challenge. Who doesn't love a challenge? And Karoon, funny you mentioned this. I nearly put that in today. I just felt it needs to do a bit more. A bit like that Mad Paws, isn't it? Now, this is far more liquid than Mad Paws. We've got much better price action, of course. But it'll take a little bit of time, I think, for this leopard to change its spots. So, and you know, the energy sector's not great either. Energy prices aren't that great. So let us just require more of this one. Okay, let us say, give me a really solid dink that shows that long-term trend ribbon unequivocally is acting as a zone of dynamic demand, because it hasn't really done it yet. Yes, we've got a bit of a dink inside the ribbon. Okay, well, dinked in the ribbon here and died. Okay, it didn't even just touch the ribbon there and died. Even then, like, you know, here it got above the ribbon, but it didn't really dink, did it? Kind of dinked there, but you could argue. Yeah, you could argue. You could say that let me see if I can find it exactly. That candle there, you could argue was okay, but even then, it was still dealing with a major point of supply, as we probably pointed out all that time ago. I think it needs to do more. I'm waiting for a dink. Let's go to David, who's got FMG for a short or for a long. Or what are we doing? You'd be very cheeky if you were arguing that this was an aggressive setup. It's not. It doesn't meet the criteria for an aggressive setup because this base pattern should be down there. See, it should be down there. Can you see what I'm doing with my hands? So this stuff here, really, it should be. Let me move. Like, imagine I could move it. It should be down here. The base should be forming down here, and we should be turning up off the base. Okay, so that's not what we want to see. And ultimately, it's still in a bleeding, great big downtrend, long-term downtrend and a short-term downtrend. And if anything, we shouldn't be surprised if we start to see a bunch of black candles sort of punch in here, or if not there's probably here, and we come down again. So I'm not sure why you're asking about that one. I don't know what the setup is. I have requested here before that you type, hey, FMG please, Carl, as a turnaround setup or an aggressive setup or a continuation setup. Because at least then I know what you're on about. Hey, if you're asking about as a short, the answer is no, because we got a bunch of white candles here. So we're waiting for the next supply side signal. If you were short, then I think we're watching it on the basis that there's some short covering here. It's frustrating. But maybe, well, it hasn't punched up above any major points of supply. So I don't think we're doing anything just yet, but we're probably going to wait for an interaction with the short-term trend ribbon. What I'm saying is we're probably not far away from probably looking to cover a little bit back, but not yet. I still think we're full risk position. So I've covered all bases there. Okay, looks like a short continuation. Peter has. No, that's sorry, David asked the question. Peter's said something else. So, okay, don't know what David was thinking. Double bottom, but not for mine. I don't know yet, Adonis. I mean, a double bottom really should look like this, right? It should occur within a fairly short period of time, okay? If your double bottom looks like the one on screen and it has done what I'm about to, I mean, is it really a double bottom? I mean, where's the bit that goes in between? Is it that? You know, the whole point of a double bottom is that demand is building through that bottom, okay? Or excess, we've got excess demand in the system, growing excess demand in the system. This bottom here is lower than this one here. So, I mean, this is the problem with textbook definitions of technical analysis, because they're not descriptive enough, prescriptive enough, they're not explicit enough, okay? They say, oh, a double bottom. Okay, well, what's a good double bottom? There's lots of bad ones out there. So even then, you know, something like this, like, you know, is that a double bottom, or is that just higher peaks and higher troughs, right? So don't get caught up on these textbook definitions of technical analysis too much. Let us go to Peter saying, thanks for the indicators. No worries, Peter. Hub from Joel. We've got some problems here. One of those high PE darlings. The party isn't going to last forever, unfortunately. And the top was, to be fair, it actually survived a few days after Valentine's Day, isn't it? What's that? The 18th of Feb. The market topped out on the 14th of Feb right there. Popped up. The candle was a bit of a giveaway, wasn't it? Didn't hit 100, so not a round number move. Wasn't far away from it. That's a good candle. That's a good candle. Wouldn't be doing anything there. Would I have got out a third on that candle? I'd wait for confirmation. That is enough. That's a shot across the bow. That is a take it very seriously candle. That is, you are just looking for any excuse now to knock a third off the table. And that's all we're talking about, just a third. And there's your confirmation. And I believe that this candle here, you can no longer hold a full risk position after that. So this is, a minus a third. And in brackets, you're now at a plus 2/3 risk position. Okay. Then we came down. This candle here is not a problem. That white one, beautiful. Okay, even though it's a bit low, it's still in the short-term uptrend ribbon. Looking like it's going to hold. It's just routine demand side rally out of the short-term trend ribbon. But then we make this lower peak here, and that's where we start to have a problem. And again, it's a fighting retreat in, don't forget, what turned out to be a correction, and not just a correction in the market, but an unravelling of high PE stocks. It does speak to the underlying strength or the belief that the market had in this company. And it's really not until, because these are still sort of hanging on candles. Yes, you're dipping beneath this point of demand. Here's your point of demand, Joel. So, and you need to be doing this, Joel. You need to be going candle by candle. It's your responsibility. If you're going to put your money at risk in the market, then it's your responsibility to go and manage that risk. Okay, because yes, we're trend followers, but we're also risk managers. Okay, in fact, I think we're risk managers before we're trend followers. So, you would be looking at it on whichever day. So going back here, and then you get a new candle, don't you? Okay, what do? It tipped my point of demand. Should I panic? Well, that's a decent candle. Let me give it one more. I'll check it. I'll check in tomorrow at 3:45 before the market closes. geez, it's really making me work for this one. But, look, I still think the demand's there. I'm going to give it another candle. Oof, now I'm starting to doubt it. I mean, you're all watching on candle by candle. How do you feel about that now? Okay, you clearly, like, we've got a third off the table, and all we're doing is looking for an excuse to get more off the table, aren't we? Not looking to buy in now. We're just managing our risk. Oh, lower shadow. Look, I'll give it one more day, but I tell you what, if it does anything less than that, I'm going to manage it. And that might be enough for you. It's a pesky still lower shadow, isn't it? It goes to, again, the market's unraveling as this is happening. We saw the vertical move on the XJO. What do you do? I'll let you decide. But we're going to get to a point, even that, we're going to get to a point where we can no longer. Okay, hopefully we all agree on this. Because yes, I say this is not a black box system, it's a common sense system, but we all have to get to a point. Is this fair to say? We all have to get to a point where we can collectively make that decision. And if we can't, then I'm doing something wrong. So we get here and we go, look, I cannot possibly continue to hold a 2/3 risk position in this. I must do something about it. And if it's 3:45 on that day, then I'm out a third before the end of the day. Okay, because when we're doing this, like we kind of know what that candle implies, don't we? So we don't want to wait for the next day. Even that, I'm probably saying say la vie at that point and not waiting for that candle, because like what are you waiting for after that? This previous zone of demand here is now clearly, and look at the trend ribbon. Look what the trend ribbon's doing. Like previous demand is now acting as supply. Like, do you need an invitation? So look, for me, whatever. That candle, either way. And then we are here. So right now, if you ask me, well, what do I think about this? I don't think anything. I just do. Right? There's just doing, and what I would have done is that. I'm ZRP right now. I'm zero risk position. But Carl, it's a really great stock. It's got great prospects. It's got good earnings, whatever. Okay. I'm zero risk position. Let's go to MTH. Did I say I was going to pick up the pace? It's okay, but there's nothing to see here. Really, is there? Look, it needs a dink and a half. Let's just say that. Can we, Robert? Needs a dink and a half. So dink and at least a dink and a half on that one. Okay. Not impossible for it to occur. Okay, it's half decent, but if it's half decent, it's also half lousy as well. Robert is asking as a turnaround question mark. DRO, not plus 1/3 today. No, not with that candle. Disturbing candle. I don't like that. Certainly got my attention. I don't know what's going on with this one. You go into these ones hoping for the best. Let us just get rid of some of the stuff going on here. Got my attention. I don't think I'm doing anything just yet, but I would want to see confirmation of that. Okay, this is a tough one on at any good time, let alone when it's trying to rally out of that. So I think what's the end of that sentence? Just be careful. Let's go to Nicola SGM. I did cover that before. Yes, I do like it. I think getting in at the start of that candle is better than getting in at the end of this candle. I'm kind of regretting I've shortlisted this a little bit. There is a point of supply up here. You could argue it goes all the way down to there. But I think we've dealt with the bottom of it. So let me just draw in of consequence. Let's do that. Just hitting the top of that candle where it came down from and draw it across. And just understanding that, and this doesn't mean it's going to crash from here by any stretch of the imagination, but just understanding that it may take a little bit of time to work through the supply that's there. Okay, that's all. It might get just a little bit of a blop, 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 blop. Okay, and that's all. So I think this is a very, very solid FRP. Plus 1/3 if you've got a bit of a longer term view and you can look past the probability. We've got a little bit of work to do here. That's all. But yeah, and that's why I ran it today, because I do like big white candles, isn't it? And big volume push. We've removed a lot of supply, but it's about comparing this against the other ones as well, isn't it? And so yes, it got shortlisted. Yes, it even got featured, but within those features, I wouldn't go for this one over some of the other ones, but it's still very strong. Let us go to Repalm, who's got one in the US. We'll do those at the end, which should be coming very soon. AGR for Peter as a continuation. A little bit of liquid, but not terrible. And there is some decent, the candles are starting to, look, the candles, what am I saying? The candles here are better than the candles here, right? Okay, let's zoom in a bit. And we did say, we haven't covered this for a very long time, have we? All the way back in September last year, we set FOP plus 1/3, which wasn't a terrible thing to do, but by here, it's hard to see that you've still got anything left in it. Okay, here's your signal. I'm going to guess that on this candle here, I didn't cover it because the turnover filter is not valid. That just means I didn't see it. Doesn't mean you can't trade it. It is a trade there. It is a signal under my system, and that is an FOP plus 1/3 every single day of the week. Okay, we've got a little bit of supply here. So just understand that it's there, and just watch the candles when we get there. But yeah, I still think that's a long enough a way to not have to worry about it, to not let it prevent us from getting in here. Today's candle is disappointing. It's disappointing in many ways because the broader market was up. I don't know what it does. Gold stocks. If it's a gold stocks were a bit flat today. I don't think it's a deal breaker. It didn't push back further than half of the candle's range. But not a great candle. Obviously big, not big, but certainly a low close to its low. Not enough to get me out. Holding, watching, waiting for the next signal. Not a lot else we can do. Until down here, I would not want to hold a full risk position beneath there. And I would suggest by then, if it was to get down there, the trend ribbon would have gone a little bit higher, and you'd probably be exiting more than a third at that stage. Frustrating day, but everything else still very much is setting up for me. Let us go to FXG, which is similar. It's actually, I was going to say, I'd be interested to see how it compares against the gold index. And as I suspected, probably not bad, because in percentage terms, you've got to remember, if this goes up 0.5%, right, which is the minimum increment, that's a big percentage term, so it kind of overstates in many ways its performance against the gold sector. I talked about one earlier that's losing momentum. I think this is falling into that category. It's not terrible. It's not a zero risk position. It's still full risk position for now. Or if you're at 2/3 after this, that's, I think, the most appropriate place to be. And just waiting to see what it does. It's got to break out of here, or it's going to break down out of here. If it breaks out of here, hunky-dory. Would I add risk to it? No, I'm a bit worried about the supply that came in here before. I'm worried it's going to be there again. So no, I think I'd just hold what I got. If it broke down, I'd be looking to manage some risk out of that one. Let's go to GGP, which, well, in London. We'll do that one at the end. We'll do ADT first, which had a disappointing day today as well. And I'm going to go ditto on the last one. It was looking fine before that. It was starting to get itself together in this trend, but it is a little bit like that. Holding, looking for confirmation. I don't think there's any reason to do anything just at this stage. It's not an ideal candle, but not enough to push me out just yet. Let's go to CAT. I reckon is the next one. This one's for Brett. And we had some writing on this before. FRP plus 1/3. Okay, well, that kind of died in the assets there, didn't it? That's all bets are off, unfortunately. So yes, I'm guessing this was the candle we said plus 1/3, because it actually looked really good there, didn't it? I mean, maybe just coming off a lower base, and that's only just being Harry hindsight. But this candle here, that's an intra-candle pullback and then strong push there, above average volume. I think it deserved a plus 1/3, isn't it? I still think so. But yes, I don't know what caused that candle. I don't know if they pay dividends. If they pay dividends, then add that back in, if that's the case. I honestly don't know. It could be. A few companies are paying dividends at the moment. So that FRP went to that candle. And this is, if it's not a dividend, then it's kind of a deal breaker. That's kind of a species-ending event. Let me check if it paid a dividend on that day. No, it doesn't pay dividends yet. So that's just a deal. That's just a deal breaker. So yes, on that candle, I'm ZRP just for safety, conservatism. You might say that's really harsh. Yeah, well, so is that candle. Yeah, I don't like it. It says too much, and it's not just the candle itself. It's where it came. It's when it came. The fact it came straight after that one. Too many traders were long here, and now they're all waiting to get out now. Like they understand that this is not going to go like it did through here. You know, even sort of here. Yep, there's something wrong with it. So even though that candle's half decent, no, that's my position. ZRP. Let's go to SMX. Brett's saying he's got 1/3 left. Well, I think I've answered the question as to what I would do on that one. It has been a good one. SMX is looking great. Strata Minerals, okay. No turnover. Yeah, see, turnover filter 0. That's why it hasn't come up in my scans. Otherwise, I would have been all over this one. Happy to hold. Yep, a little bit of an upper shadow. Not too worried about that. This is all rubbish here. I mean, where's the point of supply? The point of supply is about there. So it's all a bit diffuse, isn't it? So I'm not going to worry about that too much. Happy holder for FRP. Plus 1/3. Maybe not with that upper shadow. Happy to hold what we've got, I think, on that one. Let's go to FMG. We talked about, looks like a short continuation at some stage on. I think it will be. Peter, you're right. We talked about the double bottom on Fortescue. CHN, we talked about potentially as an aggressive setup, an aggressive turnaround setup, if there's such a thing. I did preface this one by saying I got it completely wrong before. Probably going to get it completely wrong now. I would almost be inclined to say that if this doesn't log a really solid candle, next candle, and get itself out of that zone decisively, like high close out of the zone, I'd almost just call it quits because we're probably back to break even or very close to it. And then I just say, let's just give this one a wide berth until it's looking really good. Yes, I think that's an interesting way to put it, Max. It's an aggressive turnaround. I know we have aggressive setups. I know we have turnaround setups. This is an aggressive turnaround setup. I'm not going to make that a new category, but I think common sense suggests that that is the case here. It's a turnaround setup that is on the aggressive side of the spectrum. FPod, says Roscoe. Not sure what that's about, but we've drawn lots of pods, haven't we, today. Hub got out at 86, banked the cash and haven't looked back since. My ex cracked it at me for getting out. Probably not anymore, Adonis, on Hub. 86 is a very good price. And this candle here, that's, if you told your ex, I hope she's not your ex because you got out, but you could say, I was looking at that candle and I know that that is a big supply side event. Okay, let's work our way back up the list. We're not that far away because there weren't that many. Let's go to the first one in the USA now, which is going to be DFND, which is actually not, coincidentally, we're not appearing. Where Chrome just failed. Let's try that again. That's where I went to check if there's a dividend. Good old intelligent investor. And I'll just type in code in there. Let's go back to here though. DFND, I'm just mentioning it because, well, there's a couple of US ones as well, but there you go. There's the Aussie one, there's Defend, and that looks just as good as the other one. If you prefer to do this one, absolutely go for it. There's no difference. I just did the one that started with A because it came up first in my list. I did see this one. I did see it. I just chose not to double up on it because I have people that read my watch list the next day that won't be smart enough, let me tell you, to figure out they're the same thing. And they'll do both. And then they'll both turn down and they'll lose and they'll blame me for it. But you did see some US ones there. I'm actually curious, DFND. Silicon, DivCon, Global Aerospace. No, we don't have a US one, but I'm sure there is. I don't know what that means. I'm sure there is a US defence equivalent. That might be interesting to look at. But as nobody's asked me about it tonight, we'll keep moving. I do have GGP in London. Oh, everything's a bit slow tonight. From Peter. eventually coming up when the blue spinning circle of death does its thing. Come on, blue spinning circle of death. Do you know what time it is in Sydney and Auckland, Wellington, where some of our New Zealand viewers are tuning in from? Well, can't blame me for this one. GG, it's not the GG, or maybe it's the GGP that doesn't like their Peter. Let me, I don't want to press stocks. Oh, there you go. How about that? Don't blame me for that one. That's TradingView. Looks great. Happy to hold it. I did look at this for you before, didn't I? I'm pretty sure I said, oh, look, there might be better things out there. Look, that's probably a fair statement. There has been a lot of other good things out there. But it's also starting to look good in line with the rest of gold. The fact that gold has made record highs hasn't hurt it. Happy with that one. There's your big signal candle there, isn't it? That's the one. That's the money candle right there. So these aren't anything to worry about, or that I'm worried about. So happy to be along on the basis of that candle and still be FRP at this stage. Obviously not adding risk. Those last two candles don't warrant it. Let us click save and keep moving up to KTOS. This one is a Nasdaq stock and it looks okay, doesn't it? I mean, it's decent. And again, put it within the context of everything else. Look where it is in relation to the gold sector index. Rubbish, right? But there's no point comparing this to the gold sector. It's another defence company. How about that? So let us go IXIC, which is the Nasdaq. If we go all Nasdaq Composite Index, click OK, and we can see actually it is beating the Nasdaq. So it wasn't beating the gold sector index, but it is beating the Nasdaq. That makes more sense. So yes, it is beating the Nasdaq. That's a good sign. Decent rally off the long-term uptrend ribbon, but a wall of supply, I feel, and enough for me to say I've got to do better. I've got to do better in this environment. It's not terrible, don't get me wrong. If you've got some affinity with it, Ripalm, go for it. Okay, it's not the worst thing I've seen. It's a solid 6.5 out of 10. Okay, I'd go that far, 6.5 out of 10. But I am worried about what's happening up here. So it's up to you. If you've got it already, if you own it for some reason, you've already got it in, and you're just asking my opinion, I'm FRP on it. Okay, but personally, I think we'll find better stuff to do. Let us keep going. And we might not find anything better in the US because we don't have anything better in the US. That's it. Perry's not here. Jason's not here, so we don't have any of those traditional US stocks to look at. I wonder if they're just taking a break, and that would make a lot of sense to me as well. In their absence, I will do just a quick whip around the grounds, and I promise we'll be finished in 3 minutes. Count them. And just out of interest, okay, because for my interest more than yours, I just want to check on the old Magnificent Seven and see how they're going to give me context as to where I think Nasdaq's going, and therefore how I might be managing my portfolio. So that's why I'm doing this. And we've got some problems there, don't we? I mean, if there was just any other stock and not just the magnificent Apple, we'd be concerned that it was changing trend, and we'd be looking for confirmation that this long-term trend ribbon and the short-term trend ribbon are starting to act as dynamic supply, and therefore we're actually moving into a bear market phase. So that's very interesting. Let's do MSFT. I'll just do them off the top of my head. Microsoft Corporation. That one's already changed trend. Changed trend back here. There's your confirmation. That candle there is ZRP. Okay, and hopefully you can see it. Hopefully this really just should stand out like a sore thumb right there. Under my model, go tell your friends, go tell anybody who'll listen, say, look, I've lit this model, and it basically says that I can't hold a single share of Microsoft after that candle. Oh, why? Well, explain it to them, because that's it. And that is the only dink. Is that not right, ladies and gentlemen? That's the only dink that's occurred. Look at that. Look how far back we have to go. It shows the significance. Like, that's the trend starting. That doesn't count. So since this uptrend, since this bull market in Microsoft started, that is the first dink beneath the long-term uptrend ribbon. The magic ribbon, which doesn't even exist. How about that? The imaginary ribbon. Let's do, I'll get to NVIDIA in a second. I'm just trying to remember the other ones. AMZN, Amazon. It's precarious, isn't it? It just needs one more low close, and that's changed trend. I'm hoping. I love bull markets. Don't get me wrong. I love them. I'm hoping this all turns out for the better, but that's a bit concerning. And don't forget, these are big market cap stocks. Let's go Goog. Alphabet. That's turned. That's changed. It hasn't had that definitive. That's probably the definitive candle there. I think that's ZRP from there. You can't own any more Google. So that's concerning. What are some of the other ones? I'm not remembering. Tesla, I think, is one of them. No, Tesla's cracked, and it's been cracked for a while. Thanks, Mr. Musk, and his salute. So yeah, we're seeing some damage done here, aren't we? NVDA. Precarious at this stage, and maybe that'll be the last shoe to drop. Okay, I'm going to finish with TGTX, which has come in from Brett right at the end there, and that is a Nasdaq stock as well, which looks fantastic. $40, bumped into it. It did find a little bit of supply there, didn't it, at the round number? I wonder if this is the first time it's been up there. Let's double check. It's not. It's not its first rodeo at $40, so that's a good thing. That makes that little upper shadow less concerning. It's just a bit of $40 nonsense going on. Very strong. I'm a little bit concerned that even when it does go up with these upper shadows. Have you noticed? Oh, look at there. That's just a lack of complete consensus, isn't it? That's the money candle. That's really the entry for me, and I think certainly continuation there. I'm going to go FRP. If you've got it, stick with it. I don't know if I'm adding risk on it. It's just a very fine line. A lot of ums. I'm umming a lot, which means there's something in the back of my brain that's saying maybe not. I can't explain it. So that's the best I can do on that one. Something's not quite right there. It's just shadow. Like, that's the cleanest candle. Look at that one. Shadow. Interesting. That was clean. FRP. I'm not far away from plus 1/3. Okay, let's end it there. I think we've done enough tonight. Going to head back to the disclaimer and quickly say that Adonis, we'll do that one next time. The content of this presentation is general advice, has not taken into account your personal financial circumstances, objectives, or particular needs, so before acting upon it, consider it carefully or seek the help of a financial professional. Trading is risky. You could lose money. You're probably going to lose money. Keep that in mind. Everything you do is up to you and not up to me. You're responsible. Apart from that, it has been an absolute pleasure chatting with you this evening. Hopefully you enjoyed it, as the little cat is doing. Hang in there. And look, there will be a trend on the other side of it, and it'll get a whole lot easier. Until then, this is the best time to cut your teeth as a trader, to practice your craft and to practice and enforce your discipline. That's really it, isn't it? This is when it's easy to be disciplined in a bull market, right? Everything's going your way. Now's the time to really hone those skills. All the best for your trading and investing. Till catch up again. Bye-bye for now.